Welcome back to Everything Money. This is going to be a doozy of an episode. We're looking at tech stocks. We're going to compare 5 of them. This is going to be awesome. Stay with us. It's a lot of info. We're going to look at Baidu, HP, Aspen, Oracle, IBM. Are they in the wheelhouse of value investors in terms of long-term buy and hold? Or are they in the wheelhouse of Mo and those gorgeous people in the BIDNAS Nation? Are they trading these tech stocks? You'll learn all of this right now as we go into this right now, Paul. I introduce Paul. We're laughing about an inside joke, boy.
Seth's son is adorable, and when Seth was once in Mexico, or our house in Mexico.
So Paul has a beautiful, Paul and Mo have 2 beautiful, gorgeous houses in Mexico with his staff, and they make you drinks. And my little one was about 7 with a lisp, and he loves Shirley Temples. And of course, he doesn't get them at home because we don't make him sugar drinks all day. But of course, Pedro in Mexico will make them all day for him. So we're just sitting they're sitting around and enjoying the day. And Hank pops his head out and goes, "Has anyone seen Pedro?"
When you told me that story, I lost it. I still think about that story all the time. Has anyone seen Pedro?
Anyway, this is not why you're here. But you can own Mexico houses yourself one day if you invest. I'm kidding. Don't invest in them. No, that's not true. We will look at these tech stocks using our Everything Money software in terms of a value play. In a trading, we'll use our stock analyzer tool. This software you can get. We'll get into all this right now. Paul, go ahead, take it away. I've been talking too long.
No, you've been great. So first off, guys, follow us on Instagram. You'll see more about our personal life and things like that as time goes on. So these 5 companies, these were randomly given to me just now. We've looked at some of these in the past. Our goal here is just to do a 500-foot view. Our software just lets us go to the 8-pillar page immediately, tell us where there's checks, where there's X's, etc. And then we're going to look at them individually. We're going to put them in the stock analyzer tool and see what they're really worth to us based on long-term trends of their earnings growth and their revenue growth. Mo will do the stock. So let's start with Baidu. So Baidu is the Chinese search engine, right?
Yeah.
So guys, on Baidu, you'll see here it has not enough data. That is not true. But the way Chinese companies and other foreign companies report, the US is very big on, give us your numbers right away, quarterly to quarterly. Other companies, countries, and other world don't do that. They sit there and worry more about the long term. So this is why you learn this, you go find your own data. But right now, we have some pretty good, the ROIC, we don't have 5 years of it here, but on a 1-year basis, it's 7.3%, so it's probably would be an X. But Baidu overall, growing, has reasonable PE, etc. With a fast-growing company like Baidu, this is in China, right?
Yeah.
China is a very fast-growing country, not because of population growth. They have a lot of people, but the number of people who are entering the middle class is at an astronomical rate. When people enter the middle class, they buy more phones, they buy more computers, they start using the internet more, etc. This is just a very logical step. So Baidu probably has a lot of growth potential. So what we do is we go to the stock analyzer tool. At some point here, after Mo's done, I'm going to input my data, but we're going to look at, based on that growth and based on other data we have, what are we willing to pay for Baidu? It's all numbers, guys. Numbers in, numbers out. As all your assumptions are going to tell you whether the stock is reasonable or not reasonable. It's going to ask it based on several metrics that we use to drive. This doesn't mean whatever number pops up here, do it. It means, is it within the ballpark that you need to start doing more research on it? Correct?
Baidu is one of these companies that's been hit by a lot of these internal sanctions from China. This was a $340 stock just in February.
What is it now?
$163.
And I guarantee in February when I said it was $340, pardon me, if I'd said, oh, I really want to pay $150, it'll never hit $150. You know what I mean? These are just the guys. Go look at any stock. Joel Greenblatt talks about this. Go look at any stock. Look at their 52 and 104 week highs and lows. They're all over the board. They're not in a set pattern. They're all over the board. There could be 40, 50, 60% difference in prices.
If you want to take advantage of these swings by trading them, you can join Trader Mo in the BIDNAS Nation. What's going on with Baidu? Look at that, Mo.
That's that big trajectory. It was actually 352 intraday, and we've fallen completely back down. But it's just been a dog stock, which means it's just been coasting on the bottom. And now look at that, Seth.
Yes,
it's starting to pop a little bit. So before we started this video, I said, guys, look at Baidu. I mean, this is a great looking trend.
Let me explain this for our new viewers out there. So these 2 red lines on the bottom, Mo is showing, these are stochastics, 32% on the bottom, 80 on top. We want this momentum, this moving momentum on the bottom. This red line, when it crosses over the yellow, this is when we start getting an uptrend, when it hits the sweet spot at 32, and we get some engulfing candlesticks with good volume. this is when we can start trading this and getting some movement upwards. And then we have resistance lines that I don't see anywhere in the future.
Well, we got to pull. I bet there's a lot of resistance here because it's probably under a lot of moving averages. But let's just let this red line get into the sweet spot, followed by the yellow. And with some engulfing candlesticks, this is going to do very well. Why don't we just pull up those resistance points real quick? So Seth, look at this. You can see that it's on top of its 25-day moving average, but it still has to get through the 200, 100, and 50. So it needs a lot of volume. Basically, it needs a lot of volume to push through those levels. So China's out of favor right now. When it comes into favor, especially something like this, I also consider this kind of like a hype-ish stock. This is something that hype dorks flock to.
Yeah, and volume is that fuel to the fire that we need to get the
gasoline to a car.
Yeah, to get it going. So.
Or the plug-in to your EV.
That's right. Thank you, Mo, for that. Appreciate that. Gasoline to a car. All right, Paul, what about stock analyzer tool?
So guys, I looked at the previous data. I inputted my own assumptions. If you want to pause the screen to look at it. But the major ones are revenue growth. As you can see, revenue growth has declined over the last 10 years, which is fine. I still put 8, 10, and 12%. My goal is to be somewhat conservative here because your goal is not to buy a stock for what it's worth. As a value investor, you want to buy a stock for lower than it's worth because you're going to be wrong sometimes. Hit the analyze button, and Sethi, look at this. Look at this. It's well within, well below my mid numbers. My mid numbers are 175 to 245. It's 163. High numbers, assuming my high assumptions, it's a $300 to $450 stock. I just look at this saying, guys, if you believe the numbers out of China, which is always a concern, and you believe that China's clamp on recent events on tech companies is going to go away, then I think you start buying these shares and start doing some more research and deciding if you're going to be in this company. Because I just look at it as the Google of China, right? It's they're going to still protect themselves, and I think they're decades away from being fully free and capitalist.
Mo, the next company is HPQ. Are people trading HP over there? We've talked about this in the past. I don't even own this stock at the moment.
Yeah. So this is the high that it made over the last 2 years, and right now it's just a dog stock. So, but the good thing is if you look right here, there's a little gap right there that needs to fill. So I do think that eventually this will fill. Gaps fill about 90% of the time. So just keep following this thing. Throw it on a watch list. Throw it on your dog stock list. Eventually this thing's going to pop up. Institutions are going to become in favor of this thing, and you'll be the first one into it if you keep it on your dog stock watch list.
Of course, HP makes the computers, the printers, the printing supplies. Dunder Mifflin is a huge distributor of HP. And so, Paul, let's look at the 8 pillars for HP while you're there as well.
Yeah, so here are the 8 pillars for HP. Ooh. It's an all 8 pillar stock, right? By the way, in full disclosure, I have some HP shares. And the funny part is, here's what's great. I love when people tell me, hey, Paul, Alibaba, I don't even check these stocks. I don't even check them. HP is at 28. I think I bought it at 28, so I'm pretty much even. I don't care where they're at. I'm sitting there saying, I like the company, I like the stock, I like what they're doing. They're buying back a ton of shares. They bought 30%, 31% of their shares back in the last 5 years.
Just for a moment, though, I think maybe someone might be confused. Like, I don't care where they're at. Describe that a bit.
So, to me, I'm buying the company shares like I'm going to own the company. So what I care about is the only time I'm going to make a difference in my decision is, has something changed in HP's news?
I see. So like Warren Buffett, this is one of these companies that you can buy, and if they shut down the stock market for the next 5 years and the world just
I'd actually prefer they did that.
Yeah, you'd be fine with it because
I'd actually prefer that
because then it's a simple company, simple to understand.
And they're doing all the things I like. They're growing revenue a little bit. They have low PE. They're growing revenue a little bit. They're growing profit. They're buying back shares, selling at a low multiple. I mean, look at its 5-year PE is 9.5. Its current PE is 8.3. And they're paying a 2.8% dividend that they can easily afford.
Wow, look at that.
Look at this dividend. Easily afford this dividend. Their 5-year free cash flow is 3.75. They pay out about $1 billion. So I look at this going, okay, I'm pretty excited about this. I went to the stock analyzer tool while Mo was talking. I inputted very conservative numbers. It's HP. Even though they've grown 5% a year in revenue over the last 5 years, I'm assuming 2, 3, 4, buying back some shares, which are still lower than they ever did in the last 5 years. Profit margin, lower. I just look at all these things. I hit the analyze button, guys. It's a $28 stock, and I have it worth 35 to 55. I'm good. And I'll make 12.5% of this thing for the next 7 years as long as my assumptions play out. And it's only selling in the future at 12 PE and 12 times free cash flow. So I look at this saying, I like HP for that reason. Buy back shares, pay down debt, whatever they're going to do. and just go from there.
Aspen Technology is a leading global supplier of software solutions that optimize asset design, yada, yada, yada. Mo, are people trading AZPN Aspen? I can't imagine the volume is any good on this puppy.
Well, why don't we look at that first? I've never heard of this company before, but that doesn't mean anything. Yeah, you're right. It's a very low volume stock. I mean, the average is probably 300,000 shares traded per day. But let's learn from this thing.
Uh-oh, look at this. What's going on with these gaps?
This was a gap down, and I say 90% of the time gaps fill. Look at that. The gap filled right back up. So this gap happened. I don't know, could be earnings, anything. But right now it's just coasting on the bottom like a lot of stocks are. So let's just be patient with this. Let it move up into the sweet spot. I think eventually this gap will fill. I mean, if you look historically at this stock, it often has gaps. It's very volatile. That's the problem that's why I don't like trading stocks that are so low in volume, because you do get these gaps. But if you look around, the gaps do fill. So, I mean, this one, it came right and filled that gap. So I would look for that gap to fill at some point. Keep it on your watch list.
If this trading chart looks like nonsense, it probably should. There's a language you can learn. It took me some time, and now look at me, Mo. I'm a specialist. We have friends that are learning this in just a couple months. And
I do not make a decision unless I talk to Seth about investing.
Thank you, Paul. And people in the BIDNAS Nation who are very young investors are getting this. They're following rules and they're slaying it. So no promises, of course, but boy, I just love your style, Mo.
Listen, there's a few guys in the BIDNAS who made over 30% this year, and whenever I ask them, what'd you do different? I just follow the rules.
Yeah.
So you guys are all out there, they're going to change the rule. Just follow the rules.
Yes.
It's so funny. I had lunch yesterday with a friend of mine. He said, systems end up working because people don't follow systems in investing. That's why they work. Because everybody deviates from the system, and that's why the system ends up working in the long run.
I'll tell you a funny story. So one of our, Caesar, who's the day trader, he came in hot to the BIDNAS Nation. He argued with me like nobody's business, and now he's stuck to the rules. He's up 400% this year.
Oh, that's right.
Day trading. 400% day trading. And he's like, I just follow your rules. That's it.
Jeez,
that's it.
Rules are so simple.
He does not deviate.
Let's get back to
I've never heard of Aspen.
But we love Aspen, where the beer flows like wine.
And the women flock to the sound of Capistrano. What was the weird?
Women flock like the salmon
like the salmon of Capistrano. Okay, so guys, immediately I look at these checks, love this, and typically
overpriced.
Yeah, this is immediately screaming overpriced when you have your two major valuation metrics that are high, and by a lot, by over double probably. So no dividend. High return on invested capital. Wow. By the way, software tends to have high return on invested capital. Why? It doesn't take a lot of capital to go make more. They can really reinvest the money quite well. Huge profit margin. Their gross margin, 92%. Their profit margin is 45%. The risk to that is if revenue falls, their profit's going to fall considerably. So I did a stock analyzer tool. I went in. Remember, guys, the two valuation pillars were showing over double what the stock should be. I made a lot lower assumptions. The lowest number here on revenue growth was 9.5. I made the highest one 8. Buying back shares, I put it at even, and buying back 100%. So I'm still conservative in this regard. Okay? I hit analyze. 126 the current stock price.
Oh boy.
And basically has to fall in half, which what did I say before?
Yikes.
Has to fall in half. The valuation immediately. And guys, does this mean this is the Bible and it's all done? No. But I like it when I see things when I go, okay, the 5-year PE is 33, the 5-year free cash flow is this, okay, if it should fall in half, and then we go to the stock analyzer tool and says, yeah, it should fall in half. Okay, so I look at this saying, guys, expensive company, add it to your watch list, which is coming soon in our software, and if you like the software, you can get it for a lot of, it gives you a lot of benefits here. You've got the mobile app, 8 pillars, 30 years of financial data, stock analyzer tool, which we've done, exclusive daily content, 1 to 2 videos a day just for you guys, access to us, real estate calculator, stock screeners, retirement calculator, Discord community, 5,500 plus people in Discord talking, all for less than a crappy cup of coffee. 87 cents per day. If you don't think 87 cents per day is worth it for your financial future, then you are crazy. Our competitors are 200, 235, and they don't give you everything here. No brainer.
If this resonates with you, this data, finally getting control and understanding these stocks, I love this. Our patrons love it, and you can go to everythingmoney.com, join the community, and one of our members in our Everything Money community is winning a Tesla ball, the second Tesla we've given away this year. Mo, let's get after ORCL. Hello over there.
So they reported earnings last night. and they gapped down because they missed on revenue or some such thing. But anyways, again, the gaps. So this thing gapped down. I'm looking for this thing to move right back up on us. And if you look where it gapped down to, Seth, let's pull up the daily chart just so we can look at the moving averages. It bounced right off of its 100-day moving average. So I'm not concerned about this. To me, the way I would play this thing is look on your daily chart. So keep an eye, just let this thing bounce off of the 100-day moving average. Then you're going to be able to get a sweet spot reversal here, do a quick swing trade it back to $90 a share. That probably sounds confusing to you if you don't know what I'm talking about, but join the Bid and Ask Nation. Swing trades are very easy and very, very lucrative.
Oracle, Paul?
So guys, Oracle, let's go to the 8 pillars here. Another great company. They have a little bit of debt here, 7.9 times. I don't know if that's a lot or a little. I haven't really analyzed it. The 5-year PE is 25.33. Now, this is concerning because I know Oracle is not a fast-growing company. They're already ginormous. But ironically, their free cash flow is still below the 20 we want. They have a 1.3% dividend. It pays out $3 billion a year. Guys, this is very important. You have to compare their dividends to their free cash flow. They have plenty of free cash flow to pay out their dividends. And I love the fact that their free cash flow last year is higher than their 5-year average. High return on invested capital. Again, it's software. So far, I like these attributes of the company. But let's go to the stock analyzer tool. The revenue growth is very low. Over 1% a year over the last 10 years, 3.6% last year. So my job is, but they're buying back a ton of, look at these share buybacks.
Look at this.
They're buying back a ton of shares, guys, because this company is so big, it's hard for them to reinvest their money. So what are they saying? Okay, we're going to reward our investors. We're going to buy back shares. Give our investors that currently own more share of the company over time. I made these assumptions here. I think they're reasonable but conservative. I hit the analyze button. Guys, the stock's at 85. Only one price in the best of all assumptions works out. This sounds about right, 50 to 65 bucks. If you're somewhere in the 50 range, it's probably a stock you can go make above average return on as time goes on.
And just a year ago, this was a $40 stock, Paul.
Was it really?
Yeah.
Wow. Well, I'm an idiot for not buying. So anyhow, this is the way it looks. I love it. Oracle is a very, very large company. They dominate the business SaaS world, I believe, in software. So you have to decide what you want to do on that one. But I do believe you have to be very careful in terms of overpaying because they don't have the growth to justify it.
They have 430 customers, 430,000 customers in 175 countries and 136,000 employees. Oracle, what an enormous company. Amazing. $240 billion market cap for Oracle. Mo, how about IBM? Are people trading IBM?
So IBM is looking like a really nice downtrend right now, and the good news is this continued downtrend. By the way that this chart is sorting out, it's going to get down here and it's just going to coast on the bottom. And the reason I say that is this level where it gapped up was 132.50. So this gap still needs to fill. It hasn't filled yet. So they're getting great engulfing candlesticks on a pretty consistent basis. That's why I think this is going to get down here and just go sideways while that gap fills. And coincidentally, that level that I just drew with that gap is the 200-day moving average. So I think it'll hit that 200-day moving average, then it'll bounce up. But you can definitely capitalize on this on the short side.
IBM sells infrastructure services, software, IT services, and hardware in 175 countries. Another enormous company, $120 billion company, Paul. What about those 8 pillars over there? What you doing?
So I'm looking at the 8 pillars here. IBM's an interesting one because their revenue is falling. I don't know if they're selling off divisions. Make sure you look into that. Because remember, just because if a company sells out division, you don't necessarily want to punish it. Like we just, 3 years ago, we sold our biggest property that our CEO, Tim, used to run for us. That dropped our revenue overall as a company by 15%. Okay, well, did that really mean we fell as a company 15%? No, we sold off a big asset that was generating a lot of revenue. Same with acquisitions. Whenever you look at revenue growth, you want to make sure that you do more research to say, was the growth natural growth or was it through acquisitions? So they have a 5-year PE of 15.6. That's great. Healthy dividend, 4.8%. Look at that, Seth.
Wow.
Big dividend, pays out $5.8 billion, and they can easily afford it because look at their free cash flow over the last 5 years and the last 1 year. Return on invested capital, again, software, 11%. This is pretty solid. Profit margin's kind of low. But that's okay. Current PE, kind of high, 23. Don't know why. I don't know much. Seems like a little bit of debt, just like Oracle. Revenue growth, net income growth, etc. So let's put it in the stock analyzer tool. I was just filling that out. So guys, when companies are dying or not dying, when they're decreasing, I want to put in low multiples. Revenue is decreasing. Just because a company is decreasing doesn't mean it's not worth something, right? If a company was free and clear and it was going to make $5, then 4, then 3, then 2, then 1, then go to 0 and had no debt, that cash flow is still worth something. We have to calculate it. So I look at my revenue growth. I went conservative, -3%, -2, -1, all the way down. One key thing I want to point out, look at my PEs. Because it's a dying, because the revenue is going down, I want to put in low PEs.
Your mind keeps saying dying. Why is that?
You know, I say dying because we hear revenue. I mean, think about it theoretically. If revenue is always falling, eventually it's going to go to 0, right? I mean, it's going to eventually go, okay, so it's kind of dying, but there's still value to dying, especially for a company like IBM, right? And I do believe that IBM over long periods of time, as the world grows more and more, becomes bigger and bigger economically, they can do better internationally. So hit the analyze button. Okay, so my middle range is 55 to 100. My highest range hits. I would not assume that. I would go do more research on this and maybe add this to the watch list because eventually I think people will get kind of sad about IBM. I bet you that 4.8% dividend is really, because imagine if it went to our price target here, we could potentially be getting a 9%, 10% dividend, assuming they kept it. But I believe IBM should spend that cash buying back their shares because dividends are very tax inefficient, right? But again, it's selling for a little bit higher price. Maybe they're smart for keeping it. But the bottom line is they're still generating. Let's look at their cash flow statement. They're still generating. I mean, look at this cash flow, Seth. They're still generating huge cash flow numbers every single year.
Wow.
Yeah. And they're spending about a fourth of it on dividends. It's like, okay, IBM has potential here, but just be conservative on it.
IBM manages 90% of all credit card transactions globally.
Holy cow. Now let me do this, guys. Let's assume they just keep their revenue the same. That's it. Just keep the revenue the same. Our number went to almost 110 here.
It's a $137 stock.
Yeah, so it's not far off. If you believe IBM's revenue is just going to stay the same over the next 7 years, it's not far away from buying it to get a 12% return on your money. Not bad.
That is our take on these tech stocks: Baidu, HPQ, Aspen, Oracle, and IBM. That was fast. I mean, that was
fast.
That was hot, baby. That was hot to trot. Mo, you're killing it over there. And you, the patrons and Everything Money community, you know we love you. Join the software, everythingmoney.com. Join our community. Get the software. We love you. You can analyze these stocks yourself. Thanks for watching. Fondle that thumbs up, damn it.
And follow us on Instagram.
That's true.